Mortgage-backed securities make a turnaround, but today is Fed Day. That's our topic for today's Backstage Pass. Hey there, hope you're having a great day so far today. Happy Hump Day. Today is Fed Day. At 2 p.m. Eastern Time, the Fed will conclude their two-day meeting and announce their plans for the Fed fund rate. Everyone is expecting a 75 basis point rate hike. That's kind of built into the market already, so kind of expecting that. But what will happen after that is a press conference. At 2:30 p.m. Eastern Time, Jerome Powell will give a press conference, and he always does a Q&A session during that conference. Those comments that he makes during that press conference and Q&A session always have the ability to move the market one way or another. We're expecting some knee-jerk reactions, could go good for the bond market or worse for the bond market. We'll wait and see how the markets digest what Mr. Powell has to say. Specifically, what we're looking for and listening for is information or their thoughts about the balance sheet runoff for securities, mortgage-backed securities and treasuries. So we're going to be listening for that, and we'll bring you that news as it comes. And we'll also report some more on that tomorrow during our Backstage Pass tomorrow. Now, in housing news, pending home sales, this is signed contracts on existing homes. This data came out for the month of June, and it was a pretty weak report, not a really good way to sugarcoat it or whatever. It was weaker than what was expected. So it was down. Pending home sales were down 8.6% for the month of June, month over month. Pending home sales are down about 20% year over year right now. Now, if you remember back in June, that's where we saw the apex of the mortgage rates. So mortgage rates hit their peak in the month of June. So that definitely had some effect on pending home sales and definitely seeing a little bit of a slowdown. The forecast was only about 1% lower. So it was, again, the numbers were much weaker than what was expected. But since then, since the middle of June, interest rates have started to come back down. If you remember, June, the Fed raised their Fed fund rate by 75 basis points, and mortgage bonds responded positively, and interest rates have started to come back down since then. We've definitely seen some activity start to pick up since then as well. So hopefully these numbers moving forward should and will show some improvement in the housing market. Now, in mortgages, Mortgage Bankers Association released their application data for last week. Purchases were down week over week 1%. They continue to be down 18% year over year. The interest rate, the average interest rate did drop to about 5.74%. So we did see a decline in the average interest rate, which is good news. Refinances dropped about 4%, and they're down 80% year over year. And refinances make up about 31% of all transactions right now. Now, in the bond market, like we said, mortgage bonds are up today. They're up about 25 basis points at the time of recording. But we do expect to see some volatility in the market depending on what Mr. Powell has to say in his press conference. So we'll be watching that. Mortgage rates opened better today after repricing for the worst yesterday. Mortgage rates opened better today. And we'll just, everybody's going to be keeping an eye on the Fed today. And we'll see how it goes down. We'll let you know tomorrow all the things and give you all the news from the Fed. All right, that's all that we have for today. Hope you have a wonderful day. Remember, stay positive, and we'll see you tomorrow.